Hello students, welcome back. Um, we just learned what are the objectives and usefulness of financial reporting, how it has to be done, and what are the stakeholders involved. All those things we have seen in our earlier session. In today's session, we will almost same thing, but then further explanation with some additional information. Um, what type of information it gives and how it is useful to the various stakeholders. I just mentioned, okay, it is useful for the stakeholders objectives, but how it is useful, what type of information it discloses, all those things will be learning in today's session. Let's go ahead. Take some time. Okay, here it is. Just mentioning, now we have learned its usefulness, objectives, everything we have learned, but how it is useful, what type of information it provides. Okay. So in this session, at the end of session, you will be able to understand various information that financial reports provide. Various financial reports, what are they? Okay, that we'll examine in this session. Still, it has to be kept a little bit up. Investors information. I told you it is useful for how the need of the group primarily relates to decision making. I want to buy a share, I want to hold a stock, or I want to purchase, sell, hold. Okay, so all this information is provided by these financial reports to the investors. What is investors information? Imagine you want to invest, let's say tomorrow in Asian Paints, okay, or Microsoft. You cannot simply close your eyes, okay, all right, it's available, will be no. How much dividend they have paid, what are their, next budget objectives, what are their goals, and what is their market share. There are so many things. I would not like to go into details at this juncture. We will have separate module. Believe me, you may be running into another 20 videos only on financial analysis. There you will better understand. But for the time being, what is the heading? Information needs provided in financial. What are the needs? How it is calculated, how it is useful, that we will work out in detail in maybe in a fourth module. Okay. That is for investors. Next, employees. Employees should know about the stability. Supposing tomorrow some offer comes to you, once you complete your BCom, should I join this particular company, a small finance company, or let's say IBM, or Ford. You would have heard about Ford, but Ford also would have incurred some losses. In Indian Ford company, they would have done well. Like for example, AIG in the international level failed, and you simply, oh, it's the biggest insurance company guy. No, employees also. What is my future career prospects? What is the stability? Will the company continuous profit? And whether there will be any increase in my remuneration? Then retirement benefits, pension, etc. So employees should know all these things. It's all, you see, for example, in certain companies, they make provision for gratuity. They make provision for retirement benefits. So all the every year, if they don't do incur or I'm sorry, earn profit, they'll not be able to do any provision for, let us say, pension, gratuity, provident fund, as the case may be. So employees are also equally interested in knowing all this information. Do you understand? See, I simply said what are the stakeholders, yeah, they get, but why? Why, as an employee, what I should know about the company, why I should know. These are the details which I am discussing in this section. Then lenders, interested in debt servicing ability. Now, debt servicing ability. There is a ratio called interest coverage ratio, debt service coverage ratio. I as a banker, we look into that, how much leftover profit is there, after incurring all the expenditure, whether you will be able to serve my debt. My debt means I have given him loan, whether you will be able to pay that EMI, if it's a person, if it's a company, installments, on a maybe quarterly installment, annual installment, and with interest. That is known as debt servicing ability. We'll learn a lot on this, separate ratios on DSCR, debt service coverage ratio, interest coverage ratio, how many times of interest coverage ratio is there, after incurring all the expenditure. So investors, employees, lenders. Okay. Then comes suppliers and trade creditors. Why? They must have this information whether they will be able to pay me my money. Suppliers, I have given on trade credit. Trade credit means I have supplied, let's say, a chemical. Now, for example, cement company, it would have purchased some one part of its material, or let us say it's Maruti. Say they would have taken tires from Apollo or MRF. So MRF should know whether taking into the steep competition. I'm just telling you some examples. Otherwise, just by reading, there's no point. Now, looking into its market share, once upon a time, Maruti's market share was, let us say, 90. Now it is less than 50. Whether it will grow, taking into all international competition, and like, for example, electrical vehicle. So they will have that anxiety. So the suppliers, they must have the information of the entity, means company's ability. First, in the short term, at least, okay, I have given him only for 3 months, whether he will be able to repay me the amount for which I supplied goods on credit. So that's why they are known as trade creditors. Okay. Now I as a banker, I am a financial creditor. I give them money, but trade creditors supply goods. Of course, they are interested in not only short term, long run viability of the entity also. He is a major customer. Okay. Then comes customer. Now let's say it may be LG, it may be Whirlpool, it may be Sony. All customers of the company also. Like, for example, what happened to some of the most popular mobiles company, Nokia, for example. Again, it has revived. That is different. Or let's say good old Vanilla radio, Vanilla TV or Bush TV. So as a customer, I seek information about the continuation of that company. In particular, if I am buying the goods from them, it may be washing machine, it may be laptop, Dell or whatever. So I also as a customer would like to know, at least, I may not go into details of reading all their financial reports, but I should know whether the company is really stable. Finally comes, I've already mentioned this, but why they want it, what they would like to know, why they would like to know. Now, for example, government, they have manifold interest, taxation, contribution of the entity in the employment generation. How many people, for example, Infosys, look, or TCS, tax together, they have hundreds of thousand employees are working. So they have provided employment. Not only that, they have also provided some social welfare benefits also under CSR. Okay, economic activities in the nation, contribution to the welfare of the society as a whole, and infrastructure facilities. Now, just 2 days ago, I had been to one of the hospital. I saw some big vans, donated by Wipro or Infosys to a cancer hospital. Okay, so need of the entity that commensurate with the contribution to the society as a whole, welfare of the society. Simply mentioning, I want to know why you want to know. So that's what we are discussing. Then public, of course, how much employment they go on, and in some of the companies, they develop the entire area as a whole, providing better drainage facilities, the roads, the trees. Ultimately they will be contributing to the public welfare. That's why public are also interested. There I can go on giving you many examples where there are some companies, they were not in the sense, they were not acting in accordance with the needs of the public. There was some chemical effluence. You would have heard about Bhopal tragedy, chemical. So public are also interested what this company is producing. Is it environment friendly? So all these stakeholders, they want information for particular purposes. Okay. Now this you already know about it. You have done it, but we will be doing in detail of each of the statement: balance sheet, income statement, cash flow statement, statement of shareholders equity. I am not going to explain here because you already done this. In fact, I have also recorded so many videos on balance sheet, income, cash flow statement, etc. Some of you must have gone through as my students. So what balance sheet shows assets and liabilities, income statement shows income and expenditure, then other reporting information as an annexer, as a note to the statements. So when a business needs to make a decision, analyzing finance statement, it is very, very crucial. That is why if they want to plan, if they want to forecast, all this, even the management also would like to have these reports based on which they can plan according to their vision, as the case may be. Okay. Managers can look at the value of the assets. So how much assets you have, business currently holds, decide if they can afford to purchase more or maybe sell, that apart, supposing there are some errors, it's not reconciled, bank reconciliation statement you have to do, so that if you get that cash flow statement, how much cash inflow, how much cash outflow, what is the cash balance, whether it tallies according to the statement issued or passbook issued by the bank. So error detection is known as reconciliation. We call it reconciliation. There is no better way to detect illegal financial activities that catch discrepancies in finance statement, diversification, illegal activities. Everything you will come to know through these financial reports. I already explained this. They can find if an accounting error has occurred, if there is any mistakes, double credit, double debits, or whether somebody has tampered with any part of the business, or we call it embezzlement, embezzlement, frauds, and all those things you will be able to find out only through a statement. So here again I am coming to summary part. Finance reports mirror business performance in terms of numerical figures. It aims to fulfill the following. What are the goals? Periodic record maintenance, financial ratio analysis, tax purpose. I have already explained here. It is IRS as far as the US is concerned. In Indian income tax rules are separate when compared to IRS, that is Internal Revenue Service, that helps firms in filing tax returns appropriately. Almost everything I have written in detail, whatever I have covered, you please read that highlighted words. Reveal company's financial condition. I have already told you, to the bankers, investors, creditors, and for the manager for decision making. Then disclose future strategies, because we prepare a budget, in fact, here and there I will be giving my own example. I am a banker. So for example, in 2020, I am from Bank of Baroda, we had prepared Vision 2025. What will happen to my bank in 2025, which I prepared in 2020, 5 years ahead. So that is future strategies. Because of this, like for example, technological advancement, what I have to do there, supposing there is an economic slump, what I have to do. Okay, all those things in the director's report, director's analysis report, we discuss all those things. Then internal vision, I told vision, mission, internal reporting, then statutory compliance, as I told according to SEBI, according to RBI, according to ROC, register of companies, on quarterly basis you have to file the return. Then transparency, of course, once you publish the report, And once it is audited, everything is transparent. There is no fraud. There is no concealment. Okay, these are some of the advantages. And then what are the advantages of balance sheet? What are the advantages of income statement? What are the advantages of cash flow? Using all these things, how we can evaluate operation, evaluate whether compared to your nearest competitor, compared to the sector as a whole. Okay, how housing sector is doing, how let's say pharma sector is doing, or let us say financial sector is doing. So all this comparison, evaluation of operations can be done only through these financial reports. Then cash flow, I already told you, cash inflow, cash outflow, I've already explained, but I've given detailed write-up here, so that there's no need for you to search either in Google or read cash flow. If you simply read this, you'll be in a position to understand the significance of cash flow statement. In fact, I as a banker, I have told many times to my students also, most of the times whatever is given balance sheet and income statement, I may not believe. I check cash flow. There they cannot, very difficult to manage, manipulate. Whatever cash or received, whether it is reflected in bank statement. Okay, cash flow is one of the most important statement. We will be preparing cash flow statement. I will be giving you a lot of example. Okay, we'll go from simple to complex. What is that you have learned today? In this session, learned about useful information provided by the financial report, all those three reports, and all the stakeholders. I have told you who are the stakeholders, and why those stakeholders want this information, and how it helps them taking their decision. It may be investment decision, whatever. Hope you have understood this. Very simple session, no? Bye. We'll meet again.